The purpose of this support video is to provide more guidance on how to enter opening balances when using the accounting templates. The same principles apply to the basic service-based and trade-based templates. We're using the trade-based template in this example because it includes inventory and is therefore the most complicated of the three. So in each of the accounting templates, there's a report setup that needs to be completed on the setup sheet. And there's a first financial year that's specified, and this basically will never change. And the reporting year, which will be the same as the first financial year for the first financial year, and then this reporting year is used to roll the template forward for subsequent financial years. You also specify a year-end month. So in our example, we've got a February year-end, and it's the 2020 financial year. So the first day of our financial year is 1 March 2019. Okay, I just wanted to point that out. Now let's go and have a look at opening balances. So these are included on the TB sheet. The template only accommodates full financial years. So you need to start with a full financial year. If you start in the middle of a financial year, you need to start entering transactions from the start of the financial year. The opening balances are therefore specified at the end of the previous financial year. So that's the financial year before you start using the template. In this case, we had a 1 March 2019 first day, and the opening balances therefore need to be entered as at 28 February 2019. All the cells with yellow cell backgrounds require user input. So you'll see it's all the balance sheet accounts. Then the income statement accounts, because we're working in full financial years, you don't enter any opening balances there. And then this section of control accounts at the bottom of the sheet, these are all calculated and are an integral part of the template calculations. So we cannot enter opening balances here. These need to be calculated on the same basis that the closing balances are calculated. So in this section, we have bank accounts, including a petty cash and a general journal bank accounts. So there's 5 bank accounts. Then there's the inventory account, trade debtors, trade creditors, and retained earnings. Retained earnings is different from the rest because the opening balance can be entered with the one with the yellow cell background, and the rest of the closing balances, these are all formulas, these calculations. So although the opening balances is entered here, these are automated calculations. So the balance sheet accounts at the top section, that's all entered, and then the bottom section, these are your control accounts. So the bank and trade debtors control accounts, the opening balances need to be entered on the income sheet. So let's just go there. So here's your opening balances for the bank accounts, which you just enter. It's in a selling price. This is the trade-based template, so it works the inclusive amount out by multiplying the quantity and selling price. That's why it's entered as a selling price. So in this template, all non-stock entries have the amounts in the selling price column. So it just looks a bit weird. But your payment amount would be the same. The important point to note is the date. The date for both the invoice date and the payment date is the last day of that previous financial year. That's very important. If you enter the first day of the new financial year that you start with the template with, it's not going to include it as an opening balance. So both the invoice and the payment date must be that day. Then there's the trade debtors. We've got 3 example entries here. So what you'll see is that the invoice date will be before the end of the previous financial year, and your payment date will be after. So initially when you record the opening balance, this payment amount and date will be blank until the balances are paid. And then you enter the date, which will be subsequent to the start of the template, and the payment amounts. We use this account BS0799, which is a cash transfer control account. You can basically use any other account, but we recommend using this one. And when you look at the bank opening balances, you can see the different bank codes there. Okay, so trade debtors and bank accounts entered on the income sheet. Okay, let's go back to the TB. So your inventory balances are entered in the stock sheet. So this is the trade-based template. The other two templates don't have inventory, but the trade-based, you enter your startup quantity and startup cost for individual stock codes in column E and F here. These two amounts are then multiplied and it gives you a startup valuation, and you can see that amount. So all your opening stock will be entered here on an individual stock code basis, and that's how that opening stock figure is calculated. Okay, the trade creditors, that's entered on the expenses sheet. The same principle as with trade debtors applies. So there's the dates that will all be before the end of the previous financial year, and your payment date will be after. And that's how that's calculated. We again have the same opening balance control account that we're using. It's a cash transfer control account that we're using. So trade debtors and trade creditors need to be entered on an individual invoice basis, because when you receive payment or you make payment, it's the individual invoices that will be paid. It can have different payment dates, each individual invoice. So that's why it's included on that level. And that's basically it. So most of your opening balances go into column C on the TB sheet. This is only when you start using the template. For subsequent years, when you roll forward the template by changing this date, the reporting year, all the opening balances are calculated automatically. So then it's calculated in column E. It's only this column C which is used when you start using the template. Go to the support section of our YouTube channel for more template support videos.